What's up, MTG Tribe? Rick Petticelli here with a critical market update that demands your immediate attention. The S&P 500 ETF SPY and the Nasdaq 100 ETF QQQ are approaching a crucial resistance zone that could determine the market's direction for weeks or even months to come. Heavy resistance from the 200-day moving average and a prior swing high are converging to create a formidable barrier that the bulls must overcome. And what happens at this key resistance level will likely determine the market's next major move. Stick around with us until the end, as I'll be covering how key mega cap stocks are behaving at their own critical levels and what clues to look for that could help us determine which way the Nasdaq 100 will go. All right, so let's dive into these charts. First up is the Nasdaq 100 QQQ. This is a daily chart with the 8, 21, 50, and 200-day moving averages. As I mentioned in the intro, there's big resistance at this 490 to 493 level from the prior swing high, major swing high here, and the 200-day MA. Now, our market timing model turned positive on April 22nd, and there was another buy signal with the price action reclaiming the 20-day EMA on the 24th. And since then, the price action has been able to hold the rising 8-day EMA on a closing basis, which it did last Wednesday. And once again, today, Wednesday, there was a dip below the 8 EMA and recovery back above. So we have clear support from the 8-day EMA. And if that happens to fail, then we have the 21 and 50-day EMAs just below. So that would be our line in the sand if the market was unable to hold the 8. I say market, I mean the QQQ. If the price action were to break down below the 21 EMA, that would nullify the buy signal. But again, in order for this market to stage a meaningful rally, we'll need to see the price push through this 200-day MA level and hold. We're not looking for a push through the level just for a day or two and then come back down below the 200. No, we're looking for the price action to push through, hold, maybe go sideways for a bit, and then continue to push higher. So what we definitely don't want to see from the current rally is a price action stall at the 200-day MA, especially after slicing through the average. We have that sharp correction, and then we have this quick recovery back up. If the price stalls here, that would open the door for further selling, possible test of the prior low, or even a lower low. As for the S&P 500 ETF SPY, we have the same type of scenario. We have the sharp sell-off, slice through the 200-day MA, bullish recovery, buy signal on April 22nd, reclaims the 20 EMA a few days later, bounces off the 8-day MA last Wednesday and once again today, Wednesday. So if the price action can't get through this 200-day MA and swing high, and it breaks down below the 21-day EMA, then we're looking at the price action possibly rolling over from here, especially if it were to break some sort of uptrend line, if there are multiple touches here. If it were to break down below this uptrend line and then begin to sell off and break the 21 EMA and fail to get back above, that could open the door for another leg lower. The one index that is showing a bit of relative strength is the IWP is a mid-cap growth ETF, and it's our proxy for growth, which is what we prefer to trade in our newsletter, the Wagner Daily. And the price action showing a bit of relative strength as it's already above this 200-day moving average, but still below the prior high where it stalled at earlier this week. But the price action did find support at the 200, where there's also the rising 8-day EMA. As with the other charts, if the price breaks down below this 2150 area, that would be cause for concern. There's also this steep uptrend line that we'll have to hold. If there's a break of this trend line with the price action slicing through the 50 MA, again, that would be bad news. So that's our quick recap of what a few broad-based averages are facing, as well as this mid-cap growth ETF IWP. And as promised, let's get to a few mega cap stocks, Mag 7. We have Google with an ugly day today, slicing through the 20 and 50 MAs. This is not what we wanted to see. This slice through the 50 increases the odds that we might be looking at more of a ledge forming here, like a bearish consolidation in a downtrend, especially if the price can't get back through this 160 area If it consolidates in this area and then eventually rolls back over, that would be ugly. So we're not even looking at a possible test of the 200 right now. We're just hoping that Google can get back above the 160 area and hold. If it can't, then we could be looking at a resumption of the downtrend. Another Mag 7 stock that's struggling is Apple, which just can't seem to get above its 50-day MA. It's a declining 50, declining 20. Even the 200-day MA is declining. The 50 is below the 200. Now we have this downtrend line as well to offer resistance. So what we're looking at in Apple is if the price action can bottom out around this 192 area and push higher, what happens on the bounce? Can the price push through this 200 level, 210, and push through the swing high in the 50 MA? If not, does it just chop around in this area and eventually break support here and head lower? That also wouldn't be a good look. And next up is Tesla, which has struggled also with the 200-day MA, like the broad market averages. The only difference with this bounce in Tesla is there hasn't been much of one. If we use a Fibonacci retracement calculator, we have only just a little bit above a 0.236 retracement, not even a 382 of the last wave down. And if it can't push through the 200-day moving average, maybe it just needs more time, more sideways action to chop around and build out this base. Or possibly it may go the way of Google and break down below the 50 and possibly even test the lows here and potentially break down beneath this low. That's just something to watch out for. We're not trying to predict the price action here, but definitely want to keep an open mind. As far as the Mag 7 stocks that are acting well, we got those out of the way that aren't. Netflix has been impressive from a double bottom pattern here, breakout above 1,000, then cleared the high at 1075, still pushing higher, holding the 8. That's great action there. Nvidia's made some progress. With Wednesday's action, it's breaking a downtrend line, clearing the prior swing high, but showing a ton of relative weakness as it's still well below the 200-day MA. So if Nvidia can get going here, let's see how it handles the 200-day MA. And next up is Meta, above the 200-day MA and broke its downtrend line on this gap up here, which so far is held above. We have the 8, the 200, and the 50. So far, pretty good action from Meta. Maybe it needs to chop around in here, allow this 20 EMA to catch up, and then push higher. For now, though, in pretty good shape, though it's going to have to push through this area to get going here. And this last chart of Amazon here, also lagging QQQ as it's still below the 50-day MA. And if it can't hold this 180 level and the price action rolls over from here, we could see a test of the prior lows. And in going through each stock of the Mag 7, we forgot Microsoft, but just a quick look there. We have a big volume gap up that retakes all the averages. However, it's into a ton of resistance overhead here. So all those who are long from the plus 400 area that held here, this is their chance to get out near break even. And there's also a downtrend line here that will have to be broken for any kind of a breakout to happen. So really we have just one great looking stock in Netflix, and then we have Microsoft and Meta above the 200 AMA, chopping around trying to digest the gap. And then we have several stocks like your Apples, your Goog that are struggling to hold ground and could roll over. How these stocks react over the next 2 weeks could give us more insight as to how the Qs, which direction they move from here. Well, that's a wrap for this video. If you found this analysis valuable, check out our previous videos on your screen right now. Drop a comment below with your own thoughts on whether the market will break through or get rejected at these resistance levels. Your insight helps our entire MTG Tribe community. Remember, the most successful traders prepare for multiple scenarios rather than betting everything on a single outcome. Until next time, this is Rick Petticelli, reminding you to trade what you see, not what you think.